Perfect. All right. So your access is now granted into the video training series. Let's get started. As I mentioned, my name is Jaleesa. I am the cash flow apprentice, and I study under 30 plus multimillionaires, learning and mastering wealth building infrastructures, money strategies, and mindset principles to enhance the quality of life and being able to live life on my own terms. I've taken that knowledge now and created a firm referred to as Equip 3000, where we provide cash flowing solutions. There, we equip real estate investors and entrepreneurs alike in building real estate investing businesses that are powered by strategies, systems, and support so you can begin creating the profits that you deserve. Through that, I've actually began creating the ROI project, where I'm the lead architect there. And we actually build tools to support the endeavors of real estate investors and entrepreneurs within their endeavors as well. And so this has really been a full circle opportunity for me. And I want to just be able to take some time through this video series and show you some of the things that I've been learning along my journey. So for today's agenda for this particular series or training video, we're going to be learning about exactly what is cash flow. Okay. Cash flow is starting to become more of a buzzword. And so I want to get back to the basics so we can begin having a solid foundation to build on throughout this series. We're also going to be talking about 4 different ways that you can cash flow. Okay. Maybe a graphic that you may have seen, some may not, but stick with me because there's some powerful information in this information. And then lastly, we're going to cover exactly how does cash flow. Okay. It's really breaking it down on a visual sense so you can see exactly where the money goes. Cool. All right. So what is cash flow? If you look at it at its basic definition, it's the money that comes in, and after all expenses that have been paid out, the money that continues to flow, that's what we refer to as cash flow. The money that is left over after you met all obligations, right? And so with this cash flow, we're going to be able to take that down and start creating opportunities that brings more cash flow into our lives as well. And so welcome to the cash flow quadrant. Now, this is a term and maybe a graphic that you've seen before, but I want to break it down so we all have a clear understanding of exactly what we're looking at here. And so with the cash flow quadrant, you have 4 different opportunities to cash flow. The first is being an employee, where you have a job, right? You go to school, you get good grades, get a good job. And if your parents were like mine, you get a good job with benefits, right? And ultimately you end up with in wage, right? What I've learned through my studies here is that profits are actually better than wages. Okay, because wages is something that you have to trade something for. As an employee, you're trading time for wages. Okay, and time is a limited source. We only get 24 hours of it each day. But there are also 3 other currencies that you can be able to utilize and trade things for. The most popular, right, is money. Right? Money or credit. If I can be able to give you some money in exchange for something else, that is considered true value, right? Being able to trade my time like I did on my previous job, right? I traded my time in exchange for an hourly wage and then become an actual salary. Another way that you can trade something for another currency that is out there is your knowledge. People will pay you money for the things that you know, things that you can be able to do and or apply, the skills that you have. And then lastly, relationships. And I learned very quickly that your network is your net worth, right? The people that you know, the connections that you have can open so many different doors for you. And just like you're leveraging the relationship of the person who invited you to this very video training series, I want to be able to open your mind to some other opportunities out there. And so the second way that you can cash flow is becoming self-employed, where you actually own the job, okay? But not only do you own the job and trade time for the job, you are the job, right? Because if you disappear, if you get sick, if you go on vacation, you aren't producing income. And so let me just show you from this illustration here that really helped bring home this concept for me. The left side represents being an employee, being self-employed, or being a small business owner, right? They compared it to this. It's like carrying buckets backwards and forwards from a water source back to home. When you stop, so does the flow, referring to the water, right? But then there's also a limitation on the amount of water that you can carry backwards and forwards, right? And so through this video training series, I want to be able to shift your mindset and start thinking about the right side of this equation here, right? And becoming a business owner and or an investor where you create an actual pipeline that delivers even when you're not there. And this allows you to utilize your time for other things. And so through this series, we want to be able to help shift your thinking in just a bit, right? And going and start asking questions of how you can begin running a business. How can you run a business that's systemized with a proven track record, right? That produces a flow of cash into your life and gives you opportunities now as an investor where you can actually leverage money to actually make more money. And so as a business owner, you own a system that works for you. And as an investor, you actually have money that is working for you. Okay. And so the goal is to actually leverage time, leverage your money, other people's money to begin producing income within your life. Now, a business system that I own and operate, I can operate anywhere in the world as long as I have a phone and a Wi-Fi signal, right? And so my goal is to help you again shift from the left side to the right side of this quadrant, at least in your thinking, because I believe if you can see it in your mind's eye, if you can see it in your head, you can do it, right? You can achieve it. And so there's a poor way of thinking of things, and there's a wealthy way of thinking of things. And then you have the third, which is the reality that you could be broke, but you think like the poor, or you can think like the wealthy, right? And so what the wealthy do is that they leverage other people's time, they leverage other people's money, and that's the risk involved. Then they build wealth into their life, which is the reward, right? Rather than trading money for dollars, or trading time for dollars, rather, right? And so there's risk and there's rewards in life. If the risk for you is taking 8 hours on the job and then the reward is a paycheck, then that's your reward, right? However, you weren't probably joining us on this video training series if you were actually satisfied with that current reward. And so my guess is that you're looking for other ways to develop income. And the data has proven that with 74% of the wealthy generating their wealth from real estate and business development, let's not recreate the wheel. Let's actually join in on the fun. And so in my life, through my cash flow journey, I actually started on the 40-40-40 plan. Now, this is a picture of Atlanta traffic, and it can get serious, right? When I refer to the 40-40-40 plan, I'm talking about spending 40 hours a week on your job for the next 40 years of your life. And afterwards, being able to retire and actually have only 40% of that income that you made come in as income going forward. Okay. What I've learned is that the average 65-year-old has less than $27,000 saved in retirement. So that means 95% of individuals who are over 65 are depending on family, they're depending on friends, as well as the government. Now, I don't want to be there. I don't want you to have to be there, right? So let's look at a different plan that you can implement and start changing the way that you think and the perspective that you have on life. And so with the 40-40 plan, it actually shakes down to an American nightmare and or the American dream. And so when we look at the American nightmare, by the age of 65, 54% of individuals are dependent on family, friends, government, right, to actually help and support them as they live out the rest of their years. Another 36 of those individuals are actually still in the workforce, whether they're corporate drones that have been on the job for decades, or they are our greeters at our favorite retail locations, right? 5% have actually passed away, and another 4% have claimed to be financially independent. And when I learned about this information, I had to dig deeper because the Department of Health and Human Resources, who provides this data for us, says that financially independent are those individuals who are making $4,000 or more before taxes. So that means they're bringing home $48,000 a year, claims that they're actually financially independent. And then you have the one percenters of the world, right? The 1% represents the wealthy, meaning out of 100 babies, only one of those babies actually make it to become wealthy. And they actually end up living what we refer to as the American dream. Now, when we break down exactly who sits in this 1%, we find 10% of those individuals are doctors and attorneys, right? Another 10% represent our CEOs and presidents. Another 5% are our super salespeople out there. And then you have another 1% of individuals who actually inherited wealth and or have accumulated their wealth through the lottery. By the way, how are those lottery tickets working for you, right? And then you have this overwhelmingly massive chunk of the pie here representing 74% made their wealth and generated their wealth through business ownership and real estate. And so I'm a big fan of not recreating the wheel, right? You could be a doctor, a lawyer, and spend the next 10, 12 years in school racking up hundreds of $1,000s in student loan debt and be taxed at the highest tax bracket, right? Or you can follow the most proven tax or track record rather, and actually follow the 74% bracket, which is through real estate and business ownership. And so when we talk about cash flow, I want to show you exactly how does cash flow, okay? And that's really understanding the tax system in a sense. But before we get into that, I want to show you something here because this was my life before I got involved with deep studying as far as understanding and mastering cash flow. And this is how majority of Americans actually have their life set up, where we're paying out about a third of our money out in taxes, whether it be property taxes, income taxes, sales taxes, right? All kinds of taxes makes up about a third of the money that we generate. Another third of the money that we create is actually paid out in interest, whether we're financing our house, financing our cars, right? Financing our education, all kinds of things. And then lastly, that leaves us about a third of the money to actually live on. And so I want to be able to show you why am I harping on the right side of the cash flow equation here? Because when you look at the business side, these are individuals who are living on 80% of their money that they're bringing into the house, right? They're only paying out 10% in taxes and interest. And how are they doing that, right? That is the kicker here. And so with this pie, you'll see that you're going to pay more money in taxes than in food, water, shelter, and entertainment combined. Taxes are an important topic because those who understand it can leverage it, and those who don't pay it, period, right? And so the best way to be able to do it is really understanding and owning a business and begin investing in real estate. And you'll see why here in a second, okay? But the second piece of this pie here is hidden as well because it's hidden in interest. If you're paying out money in a form of a loan with interest, you can be able to actually save in interest costs and begin reducing the amount that you pay through a strategy we refer to as velocity banking, which I'll introduce to you in a new training. And so let's look at how cash flow, right? And so we're looking at two different statements here, the income statement and a balance statement, okay? Through this simple scenario, I want to show you everyone has these two statements, whether you have looked at it or not, okay? I want to introduce three classes of thought that regards how you manage money, okay? And that involves the poor, the middle class, and the wealthy. Now, as I go through these three schools of thought here, I do want to make a note that I'm not calling you as an individual poor because you manage your money like this. What I'm saying is that it's a poor usage of money as a tool by utilizing this strategy going forward. And so for the poor way of thinking of utilizing money, you make it, you spend it, right? We've all been there, right? And so what I'm saying is that utilizing money as a tool, this is a poor way of thinking. But I want to show you what the middle class do because they do something a little bit different. These two individuals actually may make the same amount of money, but how they spend their money is a bit differently. Because when the middle class earns money, the money comes in and then they actually buy liabilities, okay? These liabilities, again, may be their house, maybe a vehicle, right? But these liabilities end up actually creating even more expenses into our life. And so we're able to acquire things, but they're actually liabilities that are sucking money out of us. Okay. I want to show you what the wealthy do with their money because it's something a bit unique, right? They take the money that they earn and then right away they go and find assets that can create income for them, right? They take that asset and as it begin creating income for them, right? That income is what they use to actually expense through their life. This is what they're paying for food, right? For their travel, right? For things that they need that actually helps the business get going. And so this is something that was mind blowing for me because it was almost like a light switch when I saw it. And I wanted to be able to show you because this was some powerful information. Now, I do want to get a clear definition as far as assets and liabilities because the bank will tell you something different, right? The bank will tell you that an asset is something of value. But in the case of an investor, as in the case of a business owner, we look at it a bit differently. An asset is actually something that pays you, okay? And so something that is creating cash flow into your life, something that is creating revenue into your life, right? A liability is the exact opposite. A liability is something that is taking money from you, okay? Anything that you're paying out that isn't bringing cash flow back into your life is considered a liability, okay? And so going forward, I want to be able to show you some different things and how it impacts your cash flow overall. And so as an employee, here is the 1040 that you would file in a sense for your taxes. Okay. Now, you'll see here that the average person is making about $60,000 for their household. And ultimately, they're paying about a third in taxes or $20,000, meaning that their adjusted gross income or their AGI, the money that they have left over to be able to live on, is about $40,000. This is the amount that they're actually buying their house on, that they are purchasing cars on, right? All these types of things. And so these are things that I want to call your attention to so that you're aware of. Because as a W-2 wage earner, you have about 15 different write-offs that you can take advantage of. And as a business owner, you have well over 400. Okay. And so when we look at the business side of things, these two individuals may make the exact same amount of money. But on this scenario, they're actually able to live off the money first. And so they're buying their vehicles, the cars, the uniforms, the professional wear that they need, right? The travel expenses, all these different things now are beginning to be expensed through the business. Okay. And so you'll see here that the $40,000 that they're actually living on actually becomes the expense within the business. And so their adjusted gross income or the AGI left over is $20,000, thus giving them a rough estimate of about $6,000 as a tax liability. Okay. And so we have individuals in our community that have set up family management companies to actually bring their children into the business and begin giving them income so they can actually purchase their own expenses, their own toys, right? Pay for their own school fees through the business as they begin learning exactly how mom and dad earns their money, right? Creates the income that they're making from the business. The kids are learning as well. And then they're also being able and being in a position to where they can start paying for the things in their life. Okay. You can actually pay your children through your business up to about $6,350, I believe, for this current year, without actually having to give them a tax return or having to file taxes. And so this is a way now that wealthy individuals can begin paying their children, teaching their children through their business, and actually being able to create tax write-offs within their business as well. Okay. And so to recap here, we went over exactly what is cash flow. We talked about 4 different ways to create cash flow. And then we actually looked at exactly how does cash flow. Okay. And so in our next video, we're going to be learning exactly how we can now minimize that second piece of the pie. How can we reduce the amount of money that we're paying out in interest from 33% to 10%?